Welcome everyone, this is Krembo from Emotionless Crypto Trading. Today we're going to discuss about a topic if BTC is going to find a bottom in February or not. Right? So this is one of the most searched things out there in the last few months around the bottom, and especially of the final bottom. So today we're going to talk about the technical side of the BTC, putting together all the pieces of the puzzle that we have as data, and sharing with you the most important details in order to find out what's going to happen as a sort of a probability, right? So market cap is nothing special more than $130 billion right now, with an average volume that increased compared to the last months to a range between $15 and $18 billion on average per day. Right, so we used to be somewhere around $10 to $15 billion a day on average, but now since the new year we have been able to move up the volume between $15 and $18 billion, while the market is not really representing any volatility. As you can see right now, the BTC is just 0.35% on minus in the last 24 hours, which is nothing special from the volume perspective. $5.3 billion is, like I said, pretty average. BTC dominance is fluctuating 53.3, which means that the market is about to do a big movement once again, as we are used to expect. When there is nothing going on, it is pretty much preparing like a volcano in order to explode. And this is something I've been discussing with you in my other videos as well. Be aware about situations like this, because we can make a lot of the money while trading, which is great. All we need in order to do trading is volatility, and that is going to happen usually after the market goes sideways with no volume, no volatility, and very little candlesticks that are not realistically defined as long candlesticks. Right? So that's in a nutshell. Going towards this is 2-hour candlestick, and I've made something probably with a lot of the graphic signals over here, but still easy to understand chart. Stick with me, we're gonna make this chart understandable and logic. Right, so we've got 2-hour candlestick. Like I said, Bitcoin paired up with the US dollar for Bitfinex exchange. What we're looking at is a chart which is representing a potential direction for us. Now we're going to start from left to right, and I'll discuss about the most important and meaningful line, which is this green one that starts from here, and it just goes like that with a confirmation over here, another confirmation, another one, and the last one, which just happened on 3rd of February right there as a top. Right, so what we have is 1 creation point plus 4 confirmations right now, with the line that is called channel resistance line. This name is pointed right there. On the other side, what we have above this line is the environment resistance line, which is pointed right there. That starts from the top just like that. It has multiple confirmations right there, and it still goes on for a possible breakout on the channel resistance line or environment resistance line appears. Right, so keep in mind that if we break out this line right here, which also represented resistance previously, is going to appear once again. Great. On the other side, there are some details which are telling us something pretty much clearly. We've got these red lines, and you can see those red lines right here. There's another one, and pretty much everywhere where we have a top or a bottom. These red lines are telling us quite a lot, and it's a pattern that is not pretty much used by people for some reasons. Right, so what we have here from left to right once again is the lower high position that starts from the top, and it just goes like that, another lower high position, which means that from the previous high we went to a lower high. That tells us the power of the comeback of that specific pattern was weaker than the previous one. So the new top is lower than the previous one. The pattern continues towards and it creates the lower high over here once again. So from the previous one, we went down to this level. The pattern continues and it sets up another lower high and another lower high once again. So if we see that, it would just look like this, right? Pretty simple. Charts are looking something like this. That's the way the representation shows up, which creates the pattern of lower highs. And of course, that is telling us clearly that the trend which is dominating the market is bearish. In order to break out of that, we need a lot of support going on. And in order to see support going on, we need a great signal from the other side. The other side is the discussion with the lows. Now, we had a discussion with the highs, but the other side represents the lows, right? So lows needs to be in a specific way in order to tell us that the market has a probability more to increase than to decrease. If the lows are not that way, then the probability is more to decrease instead of increasing. Right, so let's take a look at the lows. Well, simple, look at that. One is over here. The next one is already establishing a lower low position, and the third one as well. Now, unfortunately, we have a movement like this. So we've got a movement from the top in the same way establishing lower highs. From the bottom, we have a movement that establishes lower lows. Both tops and lows are going in the same direction. All the data that collects from here and the entire conclusion comes in balanced to the bearish side. But attention, at a time we're going to be able to set some higher lows, which means for us to be able to establish on 2-hour candlestick, because that's what we're looking at, periodically a higher bottom that has meaningful volume and chart representation. Because it's not that simple. And please look at the first lower low from left right here. Look at this guy and compare it to this bottom, or to this guy, or to the other guy. So you can see at that time we had higher lows establishing. This one, and this one, compared to the base guy, to the fundamental guy, right? So we have higher low under establishment, which is true. And we did have a very powerful spike. Thank you so much. We had it. We had the ability to take advantage of that and profit. But what happens when we have lower highs, lower lows, and everything is just going low? By the way, we have a blue line right here that follows the channel, just like this. And we can see how the differences from the top till the bottom are squeezing. They're getting closer and closer to each other. Do you know what that means? That's clearly a pattern that is preparing the market for an explosion. So you could think about a triangle that it's squeezing itself by its nature. That's how the end of the triangle is. Creates less space for reaction and volatility. The sooner and the closer you get to the end of the triangle, if you imagine, for example, let me just clear this thing up and show you how a triangle looks like, something like this, right? So the starting point has a large field where the movement can include high volatility. But once we get closer to the final point where the triangle is touching both lines, and it's making the final formation. That's the point right there. Well, once we get closer and closer and closer and closer, the volatility between the lines such as like this, you see how it's getting shorter, less volatility. So the difference from the top till the bottom every time are less. And that's something we could see over here as well, considering the blue lines, which are starting from the top, going till the bottom, going till the new top, another bottom, and so on. Basically, we can see how the differences are getting smaller and smaller. And we could also measure this. Here's another tool. And let's just measure this lower low with this lower high, which is a 17.1% difference. If we put the tool right here on a lower low and we put it to the lower high, it's going to be around 8% difference. So we can see a significant decrease in the volatility, which is creating a stable market for the short period of time, but of course is intended to prepare for an explosion, exactly like it did in the past. We're talking all this information and details, not only from our knowledge, but let me tell you from where my knowledge is pretty much established. Well, that's simply from the market, history, and lessons. This is the place from where we could learn by the way how the market tells us a specific movement that needs to be learned and used towards as a potential pattern, right? So that's what we're trying to do. Great. There's two other things that needs to be mentioned. And you will see here the blue prices on the right side where you can see the prices. 3,400 represents a nice horizontal support. So that keeps us right now, and it seems to be pretty great. While on the other side we have 3,224, 3,200 range, which is the bottom of 2018, 2019, around that level. It's kind of the bottom of the bearish cycle. That's where we are, pretty close to that. And if a large volume of bearish energy comes in, the difference right now is just about 8.4% from our bottom till the current situation of the market, which is not pretty much far away from the situation. 8% can be achieved in a day. 9% can be achieved in a day, and especially when the market shakes pretty hardly and the volume of the entire space goes above $25 billion in 24 hours volume, you will see movements for BTC at least up to 10%, which is pretty great. That's what I'm telling you, that if in 24 hours we get triggered, we could fall below the last bottom we got, which would be, of course, putting a lot of the people in anxiety, and of course the other reaction of humans will be to start selling, thinking that the crypto is going to disappear, and probably saying that 3,200 per BTC is better than zero. Well, if you think like that, we've got two solutions. I'm gonna try to help you. If you think, or if you ever thought that the cryptocurrency is gonna close its bag and run away. We're not talking about a single identity here that controls the market. And we're not talking about anything that could control the market as a on or off button, right? So there is no identity having full control over this market, period, which tells us that this is a spontaneous market that has spontaneous rules. Cryptocurrency trading is based on market reactions of people buying and selling. That's how the battle is going. The one that dominates this battle is the one that dominates the charts. Very simple. That being said, with this little explanation, hopefully you got the idea that stands behind everything, the fact that there is no way for this market to get shut down as long as there is nobody, a single identity controlling a spontaneous established market. Right? So that's how we would have to see this. If we see it like this, other than any other social details such as companies involved, there's thousands of companies and hundreds of companies which have billions of dollars in sales per year or trillions in sales per year involved in cryptocurrency and blockchain business. Why do you think are companies that are that serious of having trillions of dollars in sales per year involved in a project or in a journey like blockchain if this is no value and it could be closed from one day to the other by somehow? Why do you think? Well, the response is extremely logic, and we don't have to search it anywhere else. It's right there. The only thing that's missing from people, in my opinion, as having to deal with more than 100 students on one-on-one coaching program that I have, and having to deal with, I should say, hundreds of people I've been speaking around this industry in the way it works and their reactions. So once again, the only thing that I believe is missing is the knowledge. When there is knowledge, then there is skill. There is education. When there is education, there is pretty much everything that we need to do something in life. It's like driving a car, building a machine, building a house. You need to be educated. You need to be skilled to do that. You need to learn that process. You need to learn how a market works before you want to handle anything with it. That's what's happening here as well. So if you got an hour per day, use it for your education, because that thing is going to pay off not only today, not tomorrow, and not yesterday. It's going to pay for lifetime, right? So lifetime earnings are accumulated from education and knowledge, which can be used at any point. Great. So I'm not trying to make this video too long, but I did wanted to cover a few things which I believe are pretty important, that are strictly connected to the charts and the crypto space. A few things that needs to be said. Great. Let's go towards 4-hour candlestick. It's right here. Pretty simple explanation. We see that we're in the lower side of the rectangle, which is representing our current structure right here. That's our entire structure, how we're moving, and this is the rectangle we have to fight with. Now, the situation of a decreasing volume which happened within this channel right there is pretty much the clear pattern that tells us there is going to be an explosion in the next period. We just have to be with clear lines that are telling us the direction of the explosion. Where is that going to be? Very simple. There's another thing right here which is pretty interesting, and this is a representation made by the Galaxy BTC guy. I found this screenshot and I did wanted to share with you. Just as a detail that could also be considered. It's not any prediction, it's not anything like a magic ball telling us clearly what's going to happen, nor a extremely useful detail. It's just an average useful detail. Great. So what we have here as a bear market on the left side of the chart is the 2013 representation that had 410 days of bear market. So that's for how long we were in the bear market when the previous cycle happened. Now, the message that this screenshot is telling us is that we have reached the 410 days bear market movement already, right now. So we're going beyond that from now if there's anything bearish going on. The big question is, are we going to have an explosion in the next days? And like I said at the beginning of this video, is it going to be February where we're going to have a movement that happened right here after the 410 days of the first cycle bear market? Are we going to have a reaction till May or close to May, probably April, of a market that is increasing? In our case scenario, this would look something like anything between $5,000 and $7,000 increase. Are we going to get there in that zone between 5 and 7 and then get back slowly below 4,000, but then of course establish from 3,200 a bottom to 4,000? This is another version if we consider this guy's screenshot right here and the data of 410 days to 411 days bear market. Now, in my opinion, if you would like to consider, I would just share with you one little detail that I don't believe into. Is this exactly the numbers, which are not seeming backed up to be, they're not backed up by any data. So why would be 410 days? Why would the story repeat this way? By giving us exactly 410, 415, 413 days, like they did in 2013 cycle when the conditions were different. So as soon as you have different conditions in the pattern, different social conditions, we could say that BTC at that time was at totally different level, speaking socially. Now it's totally different. You can go in a lot of the countries and live on BTC. Live your life day by BTC. This is something you can do in a bunch of European countries. Great. So social conditions have changed. The entire market is changing. We're trying to compare a social condition of 410 days to another social conditions using the same days. It's pretty difficult. That's why I don't believe into that. Right now, we have a market that is totally different. So this thing is not pretty much backed up by any other data than just, the number of 410 days. It's not telling us anything else. That's why it is lack of credibility. Good. Ethereum 2.0 nears with phase O, pre-sale approaching stable. They're telling us that they're preparing, and we're going to have more details in February. There's going to be some other updates coming out from Ethereum's developers community on February, which is pretty great news. Ripple partner Euro Exim Bank successfully integrate XRP powered X-Rapid or Rapid. Yeah, what I'm trying to say is that we've got Ripple taking their business already to a new and more level, as it seems, which is pretty enthusiastic how these guys are having the ability to create momentum around their company, not only by having a bunch of paid marketing, because this kind of articles can be considered as well as paid marketing if they're the ones paying for this type of posts. On the other side, as soon as you have something to put down on the table, some great milestones achieved, and not empty articles like a lot of the cryptos are having out there. They've got a bunch of empty articles telling us nothing. Well, this guy right here has a different format. and it's pretty much hearing us as a new of their company's milestone, right? So this type of news are welcome to hear about how these companies are getting integrated in the real world, not only on the offline side. We do need real world integration because the blockchain and cryptocurrency needs to deal with real world money in order to increase its stability and increasement, right? So, and of course, we as human beings, we're coming from the real world, so that's what we have to participate with. Great, that's pretty much all about. I'm not going to keep you here longer. You got all the news everywhere. I'm just trying to, stick these two guys right here as important news, and we're going towards. Feel free to subscribe, hit that bell button next to the subscribe button after you did. This way, YouTube is going to let you know about my posts. Feel free to share your opinion in the comments area. Hit that like button. Let's get 200 likes for this video. We're gonna post more often. We're gonna be here with Ethereum, with Ripple, with Cardano, with Neo, with Litecoin, with all the other guys. We're trying to do some technical analysis for all of this and to set up all this information on YouTube for free. If you need one-on-one coaching, feel free to check the link in the description area. You can get in a conversation with me on Skype one-on-one. We can set this thing up. I will explain you what it involves. It's pretty much a comprehensive from A to Z coaching program for people that want to become professional traders. That's pretty much all about. Thank you so much for watching, and I'll talk to you soon.